Good morning. Welcome back to Our Neutral Voices presents a financial pillar. It's all about the money. Your host, Ryan Lepird. Joining me today is my co-host, JJ Foster.
How you doing there, Ryan?
Man, it feels weird to be back in the seat. You know, we've had a little hiatus for a couple months. So
yeah, no
good.
question. Hey, and I'm gonna tell you what, I've been, moving around the community, running a lot of people want to know, hey, when you guys gonna be back on air? So, hey, we're back. Here we are. Glad to be here.
Me too. Glad to be back with you, JJ. So, before we kind of get started on our first episode for 2025, our financial pillar, I just wanted to kind of, it's interesting learning more about the people that you interact with, right? Over our hiatus, I got the opportunity to kind of witness you on one of your side gigs, coaching the Archers out at Carroll, to that victory. And also seeing you give those refs hell on the sideline over there. Yeah. But also watched, you're a man of many talents, right? Have you ever heard of the world's most interesting man? Right, the Dos Equis guys.
Yes,
it's hard to think that's you, right? 'Cause I watched an episode last night of O&V also, and you're not only a basketball coach, right?
Yes.
In the financial industry, but
yes.
You're also an author.
Yeah,
right?
yeah.
That's awesome.
Well, the thing, what I tell people all the time, they all, to me, go hand in hand.
Mm-hmm.
And if you look at the common denominator, it's all about people, helping people, families, and children. It's kind of been, my life's work. So yes, it all just fits.
That's awesome. Like I said, it's when I was sitting there watching that episode last night, I was like, man, the things that you don't know about everybody. So is there anything else that we don't know about you?
Hey, I scuba dive. No, I'm just joking. No, that's it. I mean, if it has to do with Fort Wayne and families and children, then you're right. I'm a touch it in some type of way.
Yeah, that's why I call you Mr. Fort Wayne, right?
Hey, There you go. Appreciate it.
So diving into, the financial side of things, we've had an off-air conversation of where we kind of want to go with the show this year and things that we want to be really intentional about. And one of those things is being really intentional on reaching the youth. Right. I know when we talk a lot about the financial side of things, especially credit-wise, we're a lot of times talking from the standpoint of trying to, repair credit. But what if we got out in front of that, speaking to the youth, 17, 18, 19, 20-year-olds that are just getting out the first time, not really knowing or understanding credit, but we can get to those folks and help them understand the importance of it, how to build it responsibly. So we're not trying to get them when they're trying to rebuild it, but rather get out in front of it so they're building a positive standpoint, right?
Yeah, you're talking about laying the foundation, and I mean that's something that you're right. We've been talking about forever, and we know there's a need. It's something really that should be taught in schools, but it's not getting done. And to your point, we want to get out there and be on the forefront. 2025, I want people to expect we're going to do some workshops that focus on that age range. We're going to do some podcasts that focus on that age range because you're exactly right. A lot of people, they have holes that are dug for them. When it's time for them, they're getting out trying to establish their life, get that home, get that car, and their credit's messed up, and they don't know why. But like you said, if we come out the gate, clean slate, that puts them ahead of the ballgame.
Yeah, absolutely. So, understanding that fact, I'd love to learn a little bit more about you from a standpoint of when did your financial literacy start? Was it at home, was it school, adulthood? Kind of give me an idea of what your upbringing was with that.
Yeah, I was fortunate enough, to grow up in a household where, we talk finances a little bit, and then a lot of it is just was mirrored. But at the end of the day, I'm a frugal guy. So I'm sitting on my pennies, and I didn't believe in just going out there and just spending. I was a saver, and to my parents' credit, my grandparents and my mother and father, they were smart enough and put into me that having a credit card, I always just have one credit card, which I know we've discussed before. They send multiple credit cards to you, and a lot of people will open up every credit card that's sent to them and will use them and run them up and kind of pick a card, musical credit cards, not understanding what that is doing. But I always just had one credit card, and I'd use it when I need to, and I'd pay it off. And honestly, I wasn't even really understanding, but yeah, it was establishing my credit. So
did you have a strong foundation and support system at home that kind of helped you understand the importance of a credit card, utilizing it responsibly, that type of thing?
Yeah, I mean, yes, and like I said, pretty much directly and indirectly. We never was keeping up with the Joneses type of family. I never thought that it was something that I needed to have because one of my buddies had it, and I was going to get in trouble getting that. When I went off to college, what are those? The money machines? What are those called? I don't even
ATMs.
ATM. Bam.
Okay.
I never used it. I never even used the ATM. Mm-hmm. I had buddies that went. I had a buddy that go and get $20 out every night, but we had to take him to ATM 10 times a night. I never had ATM. I had money just in my pocket that I had. That's what I was going to spend. I wasn't going to spend over that. And again, if I had something that was a purchase, $100 or something, I may use my credit card, and I'm paying it off at the end of that month because I'm look, no interest. Hey, that's fine. I'm not if it's paid off, and that's something that was established. Like I said, I'm not sure that there was ever really a discussion in my home, but I just know I didn't see anybody sweating over any bills.
Yeah. At what age do you think that you started to understand money, have an appreciation for making money, and maybe appreciation for respect for money, right?
2 years old.
2 years old.
No, seriously though, again, just sitting, just watching, emulating, ear hustling with, adults in my family. I do know we had a discussion when we talk about investments. My grandfather had me invested in when I was, in high school. And I knew that I liked the fact that the money that I had saved, because like I said, any money I got for birthdays, holidays, somebody give me, it was going to the bank. Mm-hmm. And I loved I just left it sitting there. And then he had me investing. And again, now it's not just sitting in the bank. It's making money that is not really costing me anything. Mm-hmm. And back then it was, great rates of return. And also, too, I throw in there, there's some common sense. I had a cousin. We'd go to the mall, and we had an uncle. He'd give us $20. We'd go to the mall. And, $20 back then, man, you at the mall all day. My 20, you give me 20. I was coming back home with probably $18. Mm-hmm. My cousin, his money was gone in about 5 minutes, and he's looking, hey, man, let me borrow some money. Let me do this, that, and the other.
Did you?
No. No, but it did. It was a lesson. I mean, I was like, man, it's funny. But what it did was show me that some people, when you have money in hand, they got to spend it. Yeah, because they have it. And it's funny because I saw it in my kids. I had two sons, and that's how one was, and the other kind of, he was like me, kind of, kept hold of his money.
Mm-hmm. Do you have any thoughts on why you think that is? Why people kind of react that way? Do you think it's maybe from a lack of support system at home and appreciation or respect for money?
I think, man, there's a lot of things that go into it. And, from our workshops, we don't just focus on the financial literacy aspect. We focus on mental health. Mm-hmm. There are some things that are in people, when you talk about, impulse buys and things, these things are real. I mean, there are parallels that you can draw with why does one person do this and one do that. If we would have set two people in a room without the support system that you're talking about, there's going to be somebody that's going to take the saving approach. There's going to be somebody that's going to take that approach that, hey, I've got to spend. Mm-hmm. But definitely the support system at home, and when you start talking about it at an early age, it is a tremendous advantage.
Yeah, I absolutely agree. Not knowing your story, I was hoping that maybe we had a little bit different of a story, but we're actually very, very similar with our stories too. Okay. With my upbringing, I can remember going back to, I didn't start when I was 2, I don't think, but probably about 11 or 12, one of my buddies had a paper route. He was a couple years older than me. So, I would always go with him, and he'd pay me some money on the side to help him, do his paper route. And I just always, loved the aspect of being able to make my money and be able to do what I wanted with my money. For some reason, I've always just been independent like that. I don't want to ask anybody for anything, right? I'm not going to be your cousin and ask me to give me some money there. So I always want to have my own money from it. But from a credit understanding standpoint, I don't know that it was ever really, discussed a whole lot within my household. My earliest thoughts were, I can remember, discussions around, not that my family was talking about bankruptcy, but, the downfall of bankruptcy and why it was so important to keep your credit established. Because at that time, bankruptcy was like the worst thing that you could do. Like there was no recovering from it. At least that's the way it was presented from that. So I don't know if it was that or what it was, but I just always had a desire to be independent. I've been working since the time I was 15 and a half when I could get a job through there. And then first experience with credit was, first day of college at IPFW here in Fort Wayne. They got the booth there. Oh, come sign up for a credit card. I think I told this story on the show a few times. But, okay, I'll apply for the credit card. Get it, a $500 limit. Went out and bought myself a new stereo system for the car and everything and spent the next year, 2 years paying that back, right? $500 in little installment payments. And I don't know, it was just always I understood from the time I started using a credit card or having credit that you pay your bills first, right? If you go out and you utilize your full credit on your credit card, well, you have to pay that back, and there's nothing left to buy other things that you don't want. And now you get that feeling of, well, when the paycheck comes in, half of that's going towards that credit card bill already. So it took me probably into my mid-20s before, I realized that I got my credit cards all paid off. Never had any late payments or anything. Always was instilled in me, pay your bills first. All the extras come after that, right? And then, once I got that feeling that, hey, my credit card's paid off, I don't have to do it, I've never paid interest on a credit card since, right? I use my credit card.
Gotcha.
I use it each month, but at the end of the month, I make sure I have that money to do that. So, I'm not out there buying things I don't necessarily need. And that's always my first recommendation to somebody is when they're talking about getting a credit card is the discipline behind it, right? Building a credit card. If you know that you're not disciplined, if that money burns a hole in your pocket, it may not be the right thing for you now, right?
Yeah. Now answer me this. Now, who instilled in you? You had the credit card, but you, like you said, you made the payments each month, because there are some people, again, you pay and they pay as minimal as possible because with basically what you just described, you paid it, you established your credit, you came out ahead of the game. But there are some people that pay a costly price for that. So.
Yeah, and that's why I think it's important that we reach the youth and get an understanding of that, because I started at 18, I was paying interest and things like that, but was also building my credit. Therefore, by the time I think I was 22 years old, I owned a home, right? I couldn't have owned that home if I didn't have that credit card building credit. I couldn't have owned a home, couldn't have got a home loan if I didn't have an auto loan that I was paying on to help me build that credit, right? So that's why it's so important. Now, the roles are reversed and, I didn't understand the importance of paying my bills first, and I just thought getting a credit card was free money. Oh, well, I got what I want now. Yeah, I owe this on there, but I can either choose to pay the payment this month, or I can go buy me something else, and then I'll pay this next month, right? And then you kind of get in that downward spiral. Next thing you know, late fees are racking up, interest is racking up, and it's more and more difficult to pay that credit card. Well, now I can't buy that house, right? What rabbit hole does that lead you down? In life.
Correct.
And I think that's really the important part, is for young folks to understand the difference is it's kind of, getting ahead of the 8 ball or behind the 8 ball when it comes to your financial life, right? You want to keep playing catch up.
Yeah. Now, another question now, because this is interesting. And again, we talk about cultures. In our culture, a lot of households, it was always, hey, you pay stuff off. You had the money, you pay it off. So credit was looked at as taboo. In your household,
did you living off cash rather than
living
credit?
Off cash? If I got the money to pay for something, I'm paying for it. Boom, I pay it off. I don't owe anybody anything. Did you guys have discussions? What was discussed in your home?
Like I said, I can't really think back that there was a whole lot of discussions that said, was I around and maybe listening to my parents talk, about paying bills and this stuff. And I remember hearing my parents talking about investing and hearing them. Did they have a direct conversation with me on how this stuff's done, the importance? Well, I don't remember ever having those conversations, but maybe it was just being around that responsible support system and seeing that they did what was important. That's where, when I was talking about those bankruptcy things, that like, to me at that age, early 20s, like thinking bankruptcy, that was never even a possibility. Like, I can't go charge all this stuff and then, I don't have to pay this back. I can file bankruptcy and who cares, right? That was never even a thought in my mind, because I had always heard how bad it was, right, for you. So I can't say that was really ever a specific intentional conversation we had, but I would probably say that was more of a stronger support system and foundation of what was in the house, which once again, that's kind of when I asked you the question on where do you think, that mentality comes from, burning a hole in your pocket, is a lot of times if you don't have that strong support system in the home, you're seeing, mother, father, parents, family that are maybe not doing the things wisely, you're probably more apt to fall in those footsteps because you don't really understand the importance and respect for the money and understand the importance and respect for the credit and where that can lead you. If you come from a family that, everyone has always rented, are you thinking about home ownership? Or are you probably thinking about, this is what I've seen, this is what we do. Rent is where it's at. I don't understand the importance of home ownership, right?
Correct.
What's your thoughts on that?
Yeah, you're right. I mean, just you're emulating what you know. And the first thing kind of came to my mind when you were talking though is there's some folks that again I'm gonna say I think back to August Wilson's plays where you have that one family member who's that dreamer and has the grandiose ideas about what's needed and wants to do it right now, but then you have that anchor of the family that's talking, hey, no, we can't afford that right now. Let's build, let's save, let's work. But somebody who's willing to, like, hey, just doesn't care about the ramifications. Let me go here. I know we can't afford it, and we'll deal with the consequences later. So again, these are mindset. Nothing is guaranteed or should be above and beyond being fiscally smart with your finances. Yeah,
and I think when you're mentioning some of that stuff, there's a difference, maybe in the environment that I or we grew up in in regards to like maybe coming from an impoverished area, right? Maybe you don't have that strong background and support system on it. Is that sometimes the excuses are, I don't have the money to pay that. Okay. I don't have to do this, but then you have to prioritize what is important, right? Because you understand that, hey, I may not want to pay this utility bill. I may not want to pay this credit card bill. I have to cut back. Maybe I can't get Taco Bell today, or I can't get this today. I have to sacrifice because I understand the importance of paying this bill because eventually I want to get it here. And if I don't do these things, it's only going to set me back.
Yeah, delayed gratification, no question, is definitely key. And and right now, again, everything comes back to when we think about the society in which we live now with the social media and things, and everybody is flossing and they're living here, and you don't know what's real, what's not, but you're thinking, hey, I want that, and that's what I'm going to get regardless. But to be sensible about it, like we said, let's work to get that versus any and at all costs. Yeah.
From a frugal standpoint, when you were talking about that earlier and going to the mall, one thing that set in my mind was, when I started having kids a few years ago, by being at the mall and buying my son his first pair of Jordans on there. And Jordans were my thing. Jordan 4s are my favorite one. I hadn't owned a pair of Jordan 4 or Jordans period probably in 20 plus years, right? Probably since middle school, maybe high school. I don't even remember last time I owned a pair of Jordans. But I was buying him one, and they just happened to have a pair of Jordan 4s, exact same ones that he had. They're an adult size as my size. And I'm not joking when I said I sat there for 45 minutes debating on whether I should buy those shoes for myself, right? Did I have the money? Yeah, right?
Yeah.
It was in my savings. That money is not money that I want to touch. Finally after 45 minutes, I said, you know what? I got the money. Just do it and treat yourself. Now it's kind of spiraled out of control, and I got a little habit. I got more than one pair of Jordans now.
I witnessed your shoe game.
Now, but the difference is I can do that now, right? In my early 20s, single, working, responsibility, paying bills, all that stuff, building myself up. I didn't necessarily have the extra money to do that, so I didn't go out and splurge on it. I waited till I was at a point in my life where I have the money to do that. Now I feel it's okay to treat myself with it.
Yeah.
Right?
No, I mean, everything you just said, you're right. It's living within your means. Your different stages of your life, you've taken care of everything that you needed to take care of. Yeah, you can't afford that. And that's the bottom line. Living within your means. We've talked about budgeting and things before, and we will continue. But that's really what it is about. What can you afford, and living with that within that.
So let's talk about some of the things that people may not realize that is out there that your credit affects. Right. So jobs. When you go to get certain jobs, I know my line of business, I'm sure yours as well with the bank, being in banking and messing with people's money, I shouldn't say messing, but being responsible for people's money, right? They had to do a credit background check.
That's right. We can't be sitting on this show educating folks and our
bad
house
credit,
in order.
Right?
So,
yeah.
yes,
I'm still trying to come out of bankruptcy, right?
Correct. So, yes, check. I tell people it's funny you say jobs coming out the gate, but a credit, your credit bureau is basically your resume for your finances, and it does. You're talking about jobs, you're talking about rental, you're talking about purchases. It affects all these things.
Yeah, and when you mentioned that about the credit, one thing I was thinking about was, in terms of credit, it is really like your risk profile. How people view you as a risk, and how people view you as being a responsible individual, right?
Correct.
If your credit's not up to par, you're higher risk, which is why when you go to get loans, if you can get the loan, you're going to pay higher interest. I know I see a lot of comments out there and people, oh, well, banks are bad, financial institutions are bad because they're charging higher rates to the people that can't afford it. True, but also a lot of those people have proven the reason they're paying higher interest than everybody else because they have a history of not being responsible. They have a history of being a higher risk. Therefore, a bank's going to look at you from a risk standpoint. Okay, maybe we're willing to give you this loan, but it is going to be at a cost, right?
Yeah. And the only thing I'll throw in there too, I'll chime in. If you're at the bank and you're right, you're paying a little higher because you're risk adverse, I'm gonna tell you, it's still lower than what you would get from one of these predatory lending places. So it's always safer to go to the bank and work with them versus going to one of these places, because really at the end of the day, a bank may decline you if you are really you're out of whack, but that predatory lending is going to go ahead and allow you to dig that hole even deeper.
Yeah. I even want to throw out to add on that is, if you are somebody out there and you are going to a bank, maybe if you go to one bank and they turn you down, I'm not telling you not to go to another bank to check it out, but if you're going to multiple banks and they're not willing to work with you or extend that loan for a specific reason, specifically credit, really weigh the importance of your need for that loan, right? If it's an absolute must and you need it, then you got to do what you got to do. But ultimately, that's a sign, right? If somebody's going, if all these places are declining you, and then you go out to this one place that's going to approve you, and it's a predatory lending place,
Correct.
Be very, very careful what you're getting into, right? There's a reason why they're willing to do that and everybody else is not, and it's probably not to your benefit.
Yeah,
right?
And the other thing I'll add too, though, I mean, hopefully you're going to banking institutions that are working with you, that are explaining that to you, not just saying, denied, get out of here, but they're going to talk to you and show you exactly why you're being denied, what it is you need to improve to get you, that loan that you want. We've discussed it. People walk into, our doors, they can come in, and that's exactly what's going to happen. I look at it, a failed loan, I failed. So we're going to sit down, we're going to discuss, and I'm going to tell you exactly what you need. Going to provide that blueprint, that map. And, hopefully it's not something that you get upset about, but it's something that, if you're, level-headed about it, you understand that it's just something that we're working through. I actually had a gentleman not too long ago that came in, and I was working with him, and it was one of those deals. A lot of stuff just really wasn't adding up. It was tough, and I just stopped to ask him. I gave him a scenario that if I came to him and I flipped the script, I'm him, he's me. Would you loan me money? And,
What'd he say?
He just kind of thought, Mr. Foster, you put it like that, and we went from there. But again, I had been working with this gentleman. And that was our relationship, and that was the talk that we had. And he pretty much he thanked me and said he said he had heard, that's the reason he came to me. I was going to be fair and going to be a straight shooter. And that's just it, because at the end of the day, like I tell people, I'm the middleman anyway. I'm going to forward your information on to some folks that are really going to make the decisions. But I'm just telling you from looking at this through their eyes. So I'm a third party. I'm in between. I'm trying to help you, and that's just it. But having those relationships with people that that you can trust, it definitely helps.
Yeah, that's why it's definitely important. If you are younger and you don't understand credit, or starting and building your credit, or in a situation like that, you may not have excellent credit, is meeting with somebody like yourself early on in the process. When you start getting the idea in your mind that, hey, I might want to buy a house, right? Don't wait until you find the house to do it, because you don't know if you're going to get approved or what you're going to get approved for, what you need to fix on. Start having that conversations with a mortgage individual like yourself and find out where you're at and what the banks are going to look at, and if there's things that you need to improve. So have a 1 year, 2 year time plan, right?
Correct.
To where if you come in there and there, everybody knows if they got some issues with their credit, right? Or at least they should. Yeah,
Yeah.
That let me just find out. I don't know everything about this. Let me go talk to an expert and find out, what I can get approved for now, and if not, what I need to work on to help repair and fix that credit.
Yeah. To your point, though, you said everybody should know. And again, we're talking young folks. So there's situations where, say, you purchased a car, the car didn't perform well, you call the people, you tell them, come pick it up. I don't want this car is a lemon. Mm-hmm. And they come and pick it up. You thinking you're done, you living your life. Now you go to get this home. Hey, you got anything in your credit we should be aware of? Oh, no, I'm good. Whoop, lo and behold, you owe $17,000 because you didn't pay off a car.
You know what? I'm glad you said that because, a lot of times in my situation, my age, I take for granted what people I think they should know.
Yeah.
But to your standpoint, when I was 20 years old, I probably wouldn't have understood that or known how to pull my credit bureau or look at it. I mean, I understood the importance of paying my bills, but to see what's reporting on there, which I think ultimately is another reason why it's important for us to get out in front of that age demographic and kind of help educate that stuff on what they should be doing.
No question.
On that.
No
so,
questions.
they don't find themselves in that situation that didn't come from a place of bad financial responsibility, but just from a place of ignorance and not knowing.
Right? Yeah. There's all kind of stuff. I mean, fees you picked up in college and, you didn't pay. You just thinking, okay, I didn't pay. Hey, the heck with IU, the heck with, Purdue. They don't need, they got enough money. And you living your life. And again, boom, it showed up. And you're like, whoa, wait a minute. One time, I didn't think
collection. That bank account that I let charge off because I owed them $50. I'm like, $50, they won't even notice me. No, it's going to be out there.
It's going to catch up.
Yeah. So obviously, job can be one thing that could affect, but insurance, right? Cost of insurance, whether you're insured or the cost of insurance is definitely related to your credit score because once again, they're looking at you from a risk standpoint, right?
Correct.
You have bad credit. That also shows them something a little bit about your, right or wrong, tells them something about, yourself on paper, which is going to cost you more. Going to rent, right? You can't get approved for a home, but you want to move out. You want to go get an apartment, right? They're going to look at your credit because once again, that tells them something about who they're getting. Maybe less likely, it's going to be more of a hassle to get the payment, so you're going to pay more on those things. Yeah,
exactly right. And we're talking about things, improve credit and whatnot, or like we're talking about establishing that foundation. Mm-hmm. And I will say this too. In our climate banks, I know at Lake City we do this, looking at alternative means to help people get approved. So when we're talking about you brought up rent. If somebody has a low credit score, but they've been paying rent for 2 years, you can prove that rental history. Those are things that we're looking at.
Because rent's not going to show up on a credit bureau.
It's not going to show up. But yeah, your bureau is going to be low, and if something fell off, you may have been incapacitated or something, so you were off work for a while, so you didn't pay your bills, which affected your credit. You may have went through a divorce. Hey, you were married. And something happened. One of the other persons that ran up, a bunch of stuff. But that's documented. You got a divorce decree, whatnot. That's something that we can, look at. As long as you've reestablished, those are alternative methods that can be used to help you get approved for a loan.
Yeah, absolutely. So coming up on our end of the time here today, but I really love the idea, and I think that's where, you being the director of the financial pillar, I'd love to see us go this year is really focusing on the youth. And I know we don't have the answers now on how we do that, how we get them to understand the importance of coming to the seminars, listening to the show. Those are all things we need to brainstorm and, get feedback on from those in the community on what's the best way to reach them and get them to understand the importance of learning this stuff, right? So I think we need to be really intentional on, trying to address that and how we accomplish that this year, right?
Yeah, you're exactly right. I mean, I reach out to any youth serving organization that's out there, the schools. We're open and willing to come out there and educate kids at whatever level. Again, we're going to utilize our platform here. And like I said, do some podcasts that focuses on youth. But again, anybody that wants to open their doors, we're willing to come in.
We'd love to hear from you. So, JJ, it's great to be back with you today with our neutral voices as well. We'll be back with you in 2 weeks. Love our new tagline also. It's all about the money.
All about the money.
All about the money. So, but until next time, I'm Ryan Lepird, JJ Faster. We are ONV. Peace.